Hey, welcome back, everyone. Thank you for joining us. In our first story, I'm going to look at a question that was posed to an online columnist in MarketWatch. And I find that many of these questions submitted to the mainstream media or to online writers are both informative and sometimes entertaining. And this one is very informative because this particular individual is looking at paying off her existing reverse mortgage. She already has one from her investment savings. So let's dive in and see what the columnist has to say. So this individual is 75 years old. She's retired, has one daughter, and she is concerned what her daughter would inherit from the home, saying that she will need it. And 7 years ago, she had a real health emergency that required her to be out of work for 2 years. That's a really tough situation. But getting down into the nitty-gritty of it, she has about $325,000 remaining in home equity, despite having a $200,000 reverse mortgage balance. And so she went to work for a few years to earn some money, and she made some investments during that time, which is admirable. But now she's asking if she was to pay off that reverse mortgage, what would happen? Presently, her income's about almost $3,500 a month, and we can see the sources here are $2,500 in Social Security, which is a pretty handsome-sized Social Security check, and $400 from her brother because she gave him a private loan. So those TD accounts that she mentioned earlier and other investments are totaling about $200,000, and they're bringing in about $300 a month in cash flow for her. So she's kept her home comfortable and she's living a good life now, but would she be better off actually in paying off her reverse mortgage balance of $200,000, and then she would own the home free and clear, she says, and have access to $525,000 in equity should she need it. Well, I hate to break the bad news to her. No, she may not have access to that equity because if she sinks every dollar from her investment accounts into paying off the reverse mortgage, she may not qualify for a traditional mortgage or a reverse mortgage for that matter in the future. She just doesn't know. So the columnist doesn't pull any punches, which I'm glad to see, and he summarizes and answers in saying that you're basically facing a choice of having a home that's essentially guaranteed while you continue to hold on to your retirement investments, or you have a home that's completely paid off while you have little or no savings or income beyond Social Security. So she would lose both the liquidity of having $200,000 that's growing in her retirement account, but she would also lose that $300 a month. So he has a couple of suggestions. One is not to make decisions based on her daughter's financial well-being. She needs to put herself first. Also to seek the advice of a financial advisor. And third, and most important, says the columnist, is that if you can live comfortably off your Social Security and investment income now, you can continue to build that savings in your accounts for a rainy day and even put some into a trust that you can earmark for your daughter. That way she doesn't lose out. And he points out that with a reverse mortgage, interest is deferred and the balance continues to grow, and that would eat into her daughter's inheritance, but only interest is charged on the amount that you receive. So a couple things that we really don't know about this story, and that is, does she have a HECM line of credit with this reverse mortgage that's available that she could draw upon? Now, if she were to pay off that loan, she would be liquidating her accounts and basically be tying those funds up into the brick and mortar of the home. So the AARP is back at it again, and they are saying this: moreover, scams are common in the reverse mortgage industry. Quite interesting. And then they cite the recent actions from the CFPB against at least 7 reverse mortgage lenders or servicers for issues such as poor communication. Last time I checked, that's not a scam. Inadequate staffing, that isn't either. Preventable foreclosures, I wouldn't say that's a scam. And deceptive marketing and advertising. Well, in each of those cases, there was still a valid reverse mortgage delivered to the end user. So AARP is really in the business, I believe, of scaremongering. They're one of the scaremongers that we have to deal with. And as former President Ronald Reagan said, there you go again. Let's just say they're one of the many reverse mortgage scaremongers that we still have to contend with. But this brings up a good question. Unwinding a reverse mortgage, is it a good idea? You have to look at the source of the funds and also. But this article brings up a good question. Is liquidating assets to pay off a reverse mortgage really a sound strategy? You have to look at what the source of those funds are and also what the long-term impacts would be for potential loss of future gains in those accounts, or also the loss of monthly income that may be taken from each of those accounts as well. So this column is very insightful. And again, I think it really underlines the importance of having reverse mortgage professionals work with their borrowers on an ongoing basis. First of all, by knowing what the long-term strategy is, crafting the loan specifically for their long-term goals, and then reviewing that plan each year because things may change, but if for anything, to remind them of why they got the reverse mortgage and what the original plan was. A recent World Financial Society report shows there's a stark imbalance when it comes to retirement savings. And although total U.S. retirement assets hit the benchmark of $44.1 trillion by the fourth quarter of 2024, on average, 401k balances for those in their 60s still are averaging about $240,000. That's good for some, but it's way below the projected savings that's needed for most retirees. Now, this study, let's just go through some of the highlights of what they found. And first is that the global average retirement age is 64.3 years for men and 63.4 for women. And the total value of retirement assets in the U.S. is about $44.1 trillion. And of course, individual retirement accounts hold the largest share of retirement assets that are held here in the U.S. We also can see that the average 401k balance for employee retirement plans is $134,000, but women have about 30% less in their retirement savings than men, with a median retirement savings of $31,000 plus compared to men having $45,000. So there's definitely a gap there. Also, it should be noted that both the U.S., Italy, and Germany have the highest retirement age for both men and women, sitting at about the age of 67. But I did a little further digging, and what I found is that workforce participation here in the U.S. is increasing. 19% of those that are 65 and older here in the States are still working, and the global retirement age will continue to reach into the mid-60s. So that means that our clients are staying in their homes longer, and that trend will boost the relevance of both reverse mortgages, unlocking equity from their home or housing wealth, and also preparing to age in place, which will be our next story. So to summarize, the workforce is getting older because people are working longer, and the shift from company pension plans to self-directed retirement accounts such as IRAs and 401ks cannot be understated, because that shift has substantially reduced both savings rates and retirement account balances. So to summarize, the workforce is getting older as people work longer, but we do not want to overlook the massive shift that has really occurred in the U.S. over the last 30, 40 years, and that is the shift from company pension plans or defined benefit plans to self-directed retirement accounts such as 401ks and IRAs. That has substantially reduced both the savings rate and the balances in retirement accounts. So as retirement savings continues to lag, even amongst record asset totals, that totals really don't mean much when you look at the median retirement savings, home equity is going to become increasingly important as a untapped resource for funding retirement, and you as a reverse mortgage professional are positioned to guide your potential borrowers into leveraging that equity wisely. That's why it's imperative when you sit down with potential borrowers to know the specifics of their situation so that you can structure the loan in a way that's going to be a benefit to them in the years to come. So I'm just going to lay the groundwork for this story. None of us likes to think about it, but there's a very good chance that many of us will not be able to move about our homes like we did a decade or two ago. And few of our homes could accommodate us if we had a sudden disability or loss of mobility requiring a wheelchair. I know that mine wouldn't. The U.S. Census Bureau, in fact, reports that only 10% of U.S. homes have what is needed to age in place. And that is being defined as having at least a step-free entry into the home, a main floor bedroom and bath, and also at least one accessibility feature. So let's dive into this practical strategies for aging in place remodels. And the National Association of Home Builders saying that more adults from all age groups are now preparing to stay in their homes as long as possible. And 73% of industry leaders in the home building business say that requests for aging in place features have significantly or somewhat increased in the last 5 years. In fact, 56% of those that are remodeling homes are involved in home modifications that are related to aging in place. That according to the National Association of Home Builders West Royal Remodeling Market Index. And haven't heard of that one, but it sounds interesting. But aging in place really has some common features, and those would be grab bars, that's curbless shower stalls, or widening doorways, or even higher toilets. And this is just one picture they had here from the 2024 Remodeling Aging in Place Gold Award winner by Iron Brothers Construction. And it looks like a very open floor plan in that bathroom. In fact, if you had a wheelchair, you could just wheel right up to the sink there and get along quite well. Also, barrier-free rooms are becoming increasingly popular. An open floor plan is very important and functional as we look to age in place. So in conclusion, I want to note this, especially for HECM for purchase reverse mortgage professionals, because you are uniquely positioned to help the older home buyer integrate those aging in place features or upgrades right from the start with the increased purchase power that you get with a HECM for purchase reverse mortgage. And they don't have to tap into their monthly income savings or liquidate retirement funds, such as was the question in our first story. So this is a consideration that many experienced and seasoned HECM for purchase professionals are routinely addressing with their borrowers because they know their long-term success is going to hinge a lot on those aging in place features that are in the home or not.